Hi, my name is Christina Robinson and welcome to CMS Forex News. Today is Wednesday, November 28, 2007. Good performances in global stocks boosted the U.S. dollar and high yielders and pressured the yen. In New York, investors put on carry trade positions after Federal Reserve Vice Chairman Donald Kohn increased expectations for another interest rate cut. A rate cut will throw a bone to the companies suffering from the credit crunch, which is why risk appetite returned today. The U.S. dollar gained on the yen after initially dipping overnight. From the session low, the dollar-yen pair climbed 190 pips, touching 110.40 around noon New York time. For the last two sessions after Monday's fall, the greenback is up about 300 pips. Other pairs linked to carry trade made big moves as well. The pound-yen pair, a favorite for carry trade, climbed 530 pips from its overnight low at 223.9 to set a high above 229. Looking further back, we see that today's price action returned to levels set a couple of weeks ago. In the beginning of November, the pair traded even higher before a wave of financial institutions reported losses associated with mortgage investments. Here are the daily changes for some other yen crosses from today's open until 3 p.m. Eastern. We can see that the high-yielding commodity block of currencies did well. The Australian and Canadian dollars were up around 240 pips, while the New Zealand dollar led the pack with a gain of 270 pips on the yen. In other news, the euro-dollar pair broke down below 1.48 and fell about 100 pips after the German release on consumer confidence. The pair bounced off the 1.47 level after the U.S. released its own negative report on durable goods orders. The pair is trading about 175 pips lower than its record high set this past Friday. Let's take a look at the fundamental reports for this session. Last night, Japan's overall retail sales increased 0.8% year-over-year for October. It was the third straight month of positive results. Sales at large retailers, on the other hand, reported a fourth straight month of declines. Sales at large retailers this October was 1.8% lower compared to last October. As mentioned before, Germany showed consumer confidence falling for the month of December. The forward-looking indicator by the GfK group shows consumers more pessimistic because of rising food and energy prices. In a report from the Eurozone, money supply grew 12.3% year-over-year in October. Orders for U.S. durable goods, those designed to last several years, such as appliances, airplanes, and factory machines, fell 0.4% in October. It's the third month of declines and suggests that companies are spending less on big-ticket items for investment. Orders excluding transportation declined 0.7%. Purchases of existing homes dropped 1.2% to an annual rate of 4.97 million, the fewest since the National Association of Realtors began keeping records in 1999. Banks have tightened their lending standards while foreclosures add more unsold properties to the market, putting pressure on home prices. Now let's turn our attention to some upcoming releases. We get industrial production data out of Japan, spending on capital out of Australia, and a report on housing prices from the UK. Tomorrow morning, Canada reveals its current account as well as price indexes for producers and raw materials. The U.S. will show revised data for third quarter GDP and data on new home sales. And that's it for today's news. Join us again tomorrow here at cmsforex.com.